Good day, I greet you if you are in around Gauteng province or Johannesburg in South Africa. You know, we've been experiencing a lot of rain, a lot of storm, you know, so it's made it a bit of a problem, especially with thunderstorm to record. So I had to, you know, try and find an opening to try and make this video for you. We are still doing the series for the Forex chart pattern. We are still doing the series for the Forex chart pattern. This is the second video that we are doing for the series, but since the last video that we did, we went in hard. It's available in the channel, so just make sure you do check it out. And the video was around 1 hour long, just a little bit over an hour. So this one I'm gonna try and keep it short. What I'm going to do is today we are doing continuation patterns. We have finished with reversal patterns. Check out the video, is here in the channel. Second part of the video, we are doing continuation patterns. So what I'm gonna do is I'm gonna try and cover at least two, and then on the next video that I'm going to do just now, I'm going to cover the next two again, so that we try and keep it short. I'm gonna try and keep this video short, unlike the last time we went over an hour long video. So I'm just wanna at least try and keep it to at least 20 minutes if I am able to. So I welcome you again. My name is Mukhomutsi. I also go by Alpha Wolf Forex, or I go by the name Proqnosiz. Otherwise, this is the currency market execution channel where we are leaders in Forex education and Forex trading. If you want to learn or know more about Forex, if you are passionate about Forex trading, and not only Forex, stock, indices, you know, CFDs, whatever that it is, as long as it is a financial market, do subscribe to this channel. Hit the subscribe button now and hit the bell, because this is your channel. Otherwise, I am happy to see you. I am happy that you tuned in. Let us not waste more time and go. And before I forget, we just did a blog. Remember, this is a series, so we had a video that we did. This is the next one. We're going to do this series until we complete, and we are also in our website www.currencymarketexecution.com. It is right there on the screen. We just covered the blog, so make sure you do check out that blog. I will put the link in the description so you can catch up. It is still talking about Forex chart patterns. Let us not waste more time. Let us just go and continue and do this now. Let's go.
Hold it down, baby.
Riding around, music loud, swerving with the top down, living life on the right. You only get this one, can catch me riding around.
Okay, let's just get this started. Let's get it started. And we remember there are three types of chart pattern. We are still covering Forex chart patterns, or you can say the secrets to Forex chart patterns or trading patterns. Yeah? So we have three different types of chart patterns. We have reversal patterns, which would reverse the market. We have continuation patterns, which the basic or the main trend would continue. And then we have the bilateral patterns, which can be either way, so the market can reverse or the market can continue. So we have split them in different categories. It makes it easy for me to be able to explain to you, and it makes it easy for you also to visualize and then be able to spot them nicely. Remember, chart patterns are hidden in plain sight, meaning they are forever and always there in your chart, but it is for you to be able to spot and find them. And with this teaching, I believe and I trust that it will help you and make it easy for you to be able to spot the chart patterns, to be able to trade them successfully, and to be able to make profits through them. So let us go. So we are doing continuation patterns today. We have covered reversal patterns on the previous video. It is available in the channel, so make sure you do go through the channel and check. And matter of fact, we have plenty of videos there that you can watch, and then that can improve your knowledge and then improve your trading also. So in continuation patterns, we have continuation wedges, we have cup and handle, we have bullish and bearish rectangle. I will explain what they are and what I mean and why I put the rectangles and the flags together. And then we have the bullish and bearish pennants. And today we are going to cover continuation wedges and cup and handle, because I don't want this video to be as long as the previous one, so it's better that I cut them and I'll make another video and I will post it soon as possible. So we have covered continuation, we are covering continuation wedges, and on the previous video we did wedges as a reversal, because remember, a wedge can be a continuation and can also be a reversal, but it just depends where it is in the chart. That's why we are not putting it with a bilateral where it is both ways, because it serves a purpose and it depends where it is in a chart. So we're going to cover that just now. Number one, what is a wedge? Let us cover what is a wedge. So a wedge is a price pattern marked by converging trend lines on a price chart. The two trend lines are drawn to connect the respective highs and lows of a price series over time. The lines show that the highs and the lows are either rising or falling at differing rates, giving the appearance of a wedge as the lines approach a convergence. Wedge-shaped trend lines are considered useful indicators of a potential reversal in price action by technical analysis, or it can also be a continuation. So wedge pattern can fall in the category of reversal and continuation patterns. Identification, how do they look like? There we go. A continuation pattern looks exactly like this, and it fits the description that we just did now. I mean, a wedge in the place. We're going to go deeper now where I actually break it down. But before we do that, I want you to just understand this concept. The patterns may be considered rising or falling wedges depending on the direction. So the falling wedge pattern is characterized by a chart pattern which forms when the market makes lower lows and lower highs with a contracting range. When this pattern is found in a downward trend, it is considered a reversal pattern, like what we covered on the previous video, as the contraction of the range indicates the downtrend is losing steam. The rising wedge is the opposite. Points to remember: the falling wedge pattern is a pattern formed when price bounces between two downward sloping converging trend lines. It is considered a bullish chart formation. This is a key word, and I want you to make a mental note of the statement. It is considered a bullish chart formation. What? A falling wedge pattern, but can indicate both reversal and continuation pattern depending on where it appears in the trend. I'm going to break it down for you. Matter of fact, I know when you're doing theory, it might be or seem a little bit confusing or complex, but it is actually simple. I'm going to show you with the actual chart, with the actual pattern, and then we'll break it down together, and then you will see how easy it is. So I just want you to make mental notes of these points, because they are very important. Once you grasp this concept, you will never have a problem with identifying and trading wedge patterns, whether it's a continuation or a reversal. So the rising wedge pattern is a pattern formed when price bounces between two upward sloping converging trend lines. It is considered a bearish chart formation, but can indicate both reversal and continuation patterns depending on where it appears in the trend. So let's just do these key points before we go into the actual chart. So the following wedge chart pattern can fit in the continuation or reversal category. We covered that. When it is a continuation pattern, it will trend down. However, the slope in the wedge will be against the overall market uptrend. When it is a reversal pattern, the falling wedge trends down when the overall market is in a downtrend. So the falling wedge is a bullish pattern regardless of what kind of market it appears in. This is very important. I mention it again, and this will help you a lot if you grasp this. The falling wedge is a bullish pattern and the rising wedge will be a bearish pattern. I'm going to show you just now. So the falling wedge is a bullish chart pattern that begins with a wide trading range at the top and contracts to a smaller trading range as prices trend down. This price action forms a descending cone shape that trends lower as the vertical highs and vertical lows move together to converge. The bullish bias in this pattern can be signaled until a breakout of the descending resistance to show this is a reversal pattern from lows in price. Okay, I just want to put a side note on the statement. Remember, here we are actually talking about trading the wedge. You can still trade within a wedge because now it becomes something else. You'll be basically doing swing trading or range trading depending on the time frame of that wedge. But on this statement, I'm actually talking about trading the wedge, because trading the wedge, you are basically trading the breakout of the pattern. That's basically what you are doing. You are trading the breakout of the pattern. So that statement, this statement right here, that's what it's actually talking about. So this pattern can be in any time frame, though it is more accurate in higher time frames, and it goes across all patterns. You know, the smaller the time frame, the riskier the pattern. That's just the way it is in Forex, even when you're doing different strategies depending what strategies you are using. But the smaller the time frame, the riskier it is, because smaller time frames, the patterns or strategies tend to get more invalidated, unlike in longer time frames. So we will cover this in detail in another video. The new lows set in this pattern create lower lows, but the new lows should become less in magnitude. Less depth in lows indicates a decrease in the strength of selling pressure and should create a lower trend line of support with less declining slope than the upper line of resistance. So okay, fine, let's look at it in the chart. Remember, patterns, they appear anywhere. It does not matter whether it's you are trading stock market, whether you are trading Forex market, whether you are trading CFDs. It does not matter. They are universal. So that is why it is important for you to understand, because it is a universal. Matter of fact, patterns, they reflect a psychology behind traders. That is why patterns are formed, and as human beings, we have a certain way of doing things. So that is why the psychology and understanding what forms a pattern is very important, because it helps you to understand what is actually happening in the actual market. Now look here, the following wedge is a longer term bullish chart pattern that has a declining line of resistance and a declining line of support. Here it is, declining line of resistance, declining line of support, and they are both converging, so it says here a longer term bullish chart pattern. Why? Because it is going to continue to be a long term bullish trend. So you have a bullish trend here, and then you have a convergence here, and then you have a breakout. Simple. That's just how it is. So basically, you had bulls controlling the market, and then they reach a resistance point. Now there's the psychology behind the pattern. They reach a resistance, and from there you start seeing bears trying to reverse the market. And what happens to the bears? They also reach a resistance, what you can say a support region that they cannot break. Remember, a support is a zone or a region, it's not an actual line. So this is the actual support that the bears are failing to break. And then you see there is still strong or strength of bulls in the market. You can actually see in this move up here that you still have a bullish presence. But what happens, they go in and you find that some already, because of the previous resistance, they would cash out again, and they leave the market to the bears, who come very strongly and they lose steam again where on this zone, this support. So this support is very difficult for the bears to break. Why? Because there's still a lot of bulls in the market who always take the market up again, push it here, the bears. So now in this convergence, it is a basic fight. It is actually a fight between the bulls and the bears. And what happens, the bulls actually take over because the bears run out of steam because of the number of bulls who have been controlling the market long term. This is what it means. The falling wedge is a longer term bullish chart pattern, because the bulls have been controlling the market and then they are still present, and the bears fail to take control and the bulls come. What happens here? You find the first test here, and then once the bulls here, they sense that there is no longer a strength or a strong bearish momentum, the bulls will take over. The previous bulls who cashed out, who were also looking at this zone, what do? They all come in and they continue to push the market upward. Now look at this. This is your support that has been, that has failed to break various times. 1, 2, you can say 3 because remember it's a zone. 4, 5, 6. There's a lot of thunderstorms outside. It's been raining, it's kind of hard, so when you hear the noise and stuff, it's actually raining outside. But yeah, so, and then it failed to break here again, and what happened? The bulls came and took over the market, and once they pushed here, they pushed with some strong strength, and then they continue to push. How you would actually trade this is very simple. You put your stop loss below this support. Why? Because this support was holding, did actually manage to hold and not break, so it will be your safest. And then your entry would be, I would say, even though you see this point here, wait for a retest, wait to see the candle that is going to close below the channel, above the channel, sorry, the candle that will close above the channel, and wait for the next candle. Depending on what time frame you are trading on, wait for the next candle to see, because what can happen is, remember this channel, if let's say you are on a daily chart, can be very big, it can be very big. So you don't want to enter too early and end up being caught on a mini reversal or a correction, so you'd want to maybe wait for the candle, look for the next candle, whether it's going to close above or below, and then after that wait for the second retest. So the perfect entry would be here. That's what I would do. I know in a perfect world, that's how it is, but sometimes it can happen that this candle can close somewhere here, and you say no, this is strong, but wait for the retest. Sometimes, yes, sometimes it doesn't even retest. The pressure is just so much that it just shoot up without a retest. I understand, but the safest way is to wait for a retest to confirm that indeed, because sometimes in other wedges you'd find this zone happening all over here. It can happen maybe even here, and then you see a candle closing above the channel, and then you think it's a breakout, and you enter and it will drag you all the way down, and you don't want to experience this drawdown. So wait for a retest, and then after the retest, and once you see that the previous support, the previous resistance being tested and being broken, then you can put your entry, and then you can put your stop loss below the support. And then this pattern, as you have noticed, most pattern will give you on average 1:1 or 1:2 risk reward ratio most of the time. So but you can always push it to 1:2 risk reward ratio, or what I would usually do is, if I'm going to go into a pattern trading, after I'll go to 1:2, but I'll lock my profit around the first target, which is on 1:1, that I know that I'm now on a risk-free trade. So that's just what happens, but we're going to cover it more in detail. So the support line should become more stable and flatter as the pattern forms, showing selling pressure decreasing. In this instant, it doesn't really demonstrate that, but you will see as we continue with other illustrations what I mean by that. So as the lines converge, the odds are that if the descending line of the resistance is broken, then this pattern is either a continuation of an uptrend if it is a bull market, or a reversal from a near-term price bottom if the pattern forms during a bear market. Now, going back to what I was saying, when I said this falling wedge is always a bullish pattern. A falling wedge is always a bullish pattern. That's what I mean. If this was, for instance, if this was a bearish market, meaning the market would come here, then a falling wedge would act as a reversal pattern. So the market will break onto the upside, which means it will be bullish. As you see here, it is a bullish market. What happens? It still breaks to the upside. But as you know, in financial market trading, anything can happen. You can experience some strong fundamentals here which can break the pattern and invalidate the pattern. But when you're looking at the odds, or in more often, it will always break to the upside. That is why you put a stop loss in case something happens and then there's a reversal. But when you're talking about this type of pattern, it can give you 80 to 90% success rate. 80 to 90% success rate, which means even if you going to trade 4 or 5 times this pattern, you will always be profitable even if you lose one. And also with a good risk management strategy, it gives you good odds that eventually once you trade this pattern, you will be profitable. So yes, it is I found that this wedges are very loyal. Let me just say that they are very loyal patterns. When it comes to other patterns, they are very loyal when it comes to obeying the rules. But just to be safe, you do employ some risk management in case something happens. So that's what I mean here. So the rising wedge is a bearish pattern. We moved from a falling wedge, we're going to a rising wedge. The rising wedge is a bearish pattern that begins wide at the bottom and contracts as price move higher and the trading range narrows. So in contrast to symmetrical triangles, which we'll cover when we are doing bilateral patterns, which have no definitive slope and no bullish or bearish bias, rising wedges definitely slope up and have a bearish bias. So it's very important also when you spot your patterns to make sure that, remember the key points that we covered. That's what I meant. They help you to be able to differentiate between triangles and patterns. Between triangles and patterns. So between triangles and wedges. Between triangles and wedges. As a continuation pattern, the rising wedge will still slope up, but the slope will be against the prevailing downtrend. As a reversal pattern, the rising wedge will slope up and with the prevailing trend. Let me repeat that again. As a continuation pattern, the rising wedge will still slope up, but the slope will be against the prevailing downtrend. As a reversal pattern, the rising wedge will slope up and with the prevailing trend. So regardless of the type, reversal or continuation, rising wedges are bearish, just like what we covered now with the falling wedges. So look at this nice beautiful pattern right here. You see this a bearish trend the same way, but it's just vice versa. The same way you had the bears in control, they hit a level that they cannot break temporarily. The bulls take control, very strong bullish action here. What happens? They also reach a zone. Basically, that is the psychology behind it. They also reach a zone. Now this zone will contract and it can it can look like an ascending triangle also here. That's why I say you have to understand and look at the slope, because it can confuse you. But once you notice that all the key points that we covered in the previous slides, and then you see, look here, you start seeing your lower highs coming in here, and then you see here another invalidation. And then this also can, remember what we covered when we were talking when we were discussing the falling wedge, and I said sometimes you can enter too early looking, you must wait for the next candle. Look here, if you are trading a wedge here and then you would have thought this is a breakout depending on a time frame, and then you would be caught and it will take you up and eventually stop you out depending on a time frame that you are trading on. So it's always better to wait for a retest. Like here I explained that sometimes you don't get a retest, it just trades. But if you go in a lower time frame here, you can see that this point here was actually a retest. It broke and then it tested and then got a reject in the inside and got here. So you could have still, even if you missed it here, you could have still traded it on this point after this candle, because now you are sure that this candle closed just on the line. Wait for this one. Oh, okay, it closed below this. So even if, let's say, there's going to be a retest, if I enter here, my stop loss is going to be here. Remember, your stop loss will be on the structure that failed to break, which is this resistance here, because it failed here, it failed here, it also failed to break. So it makes it gives me the impression that this is very strong, and then I can put that once this is broken, clearly the market is going to reverse. So now this is what it is. Now if this pattern would have appeared in a a rising wedge, and this market was bullish, if this market was bullish, a rising wedge would have formed or came up to be a reversal pattern. That's what I meant when I said a rising wedge will always be bearish and a falling wedge will always be bullish. It doesn't matter the prior trend. But like again, as a disclaimer, I said in Forex or in trading, things always sometimes happen. Sometimes there's not even an explanation for them, but in more often you want the odds to be in your favor. The nice thing about Forex trading is, in the casino, when you go to the casino, the odds are in the favor of the house. But in Forex, you have the power to make the odds in your favor, to look at all the points that can guarantee you that the odds will be in your favor. That is what you call knowledge and understanding, and then basing on how often that something happens. When it comes to patterns, history always repeats itself. So the psychology behind the pattern, I also covered it already as we are going through, but let's just do it as key points so that you understand. You must understand what is always going on in the market. So the support trend line presents the buyer's sentiments, while the resistance trend line represents the seller's sentiments. The steepness of the support and resistance trend line indicates the buyers and the sellers. This word, I don't know why I type this word, because it always gives me a challenge. I will leave it for you to do. So okay, in a rising channel pattern, the slope of support and resistance trend lines is the same, since buyers and sellers have the same level of confidence in the trend direction. In a rising wedge formation, the support line has a steeper slope than the resistance line, as you saw in the illustration that we just did now. So since sellers have more pessimistic view of the direction of the trend, this conflict of expectation creates an uncertainty that range that you saw in the illustration that is not sustainable and usually resolves in the price out break. So basically, let me just put it in a most simplest way. In a continuation rising wedge, because of the continued falling prices, the sellers start cashing out, doubting the downside move still have momentum. The buyers start coming in, believing the new bullish trend is coming, just like what we explained, and which is that wedge rise that you see in the chart. You see this by the higher highs and lower lows. Remember what we did there, and eventually the bulls will hit a resistance and they will fail, which will invite more bears to come in again, this time with confidence, as the market continue to break the slope of the support, and you find to see more bulls are coming in and the market would break. Let us do a recap. We have gone past the 20 minutes mark. Okay, let us do a recap. So a rising wedge is often seen as a topping pattern, while a falling wedge is more often than not a bottoming pattern. We already proved it. The breakout is confirmed on a close below support for a rising wedge and above resistance for a falling wedge. So the entry comes on a retest of the broken level and can sometimes occur immediately without a rounded retest. Now, a typical stop loss strategy is to place the stop loss beyond the last swing high or low of the pattern. So wedges can be incredibly reliable and profitable in Forex if traded correctly. I believe we have went more than the 20 minutes mark. We are supposed to cover the cup and handle, but I believe I'm just going to rather make another video especially for that one, because I did not want to compress everything. I just wanted to break this thing nicely for you. So our next video, we are going to cover the cup and handle. That's what you're going to do. We're meant to cover both of them in this video, but I didn't want this video to be more than 20 minutes. We've already went past the 20-minute mark. So yeah, I will do the cup and handle separately, and then after that I will do the bullish and bearish rectangle and the bullish bearish pennant. Hopefully I'll put these two, I will squeeze them in one video that we can break them. I don't want to just do this thing by the way. Like I said, I want to try and make sure that you understand this. I want to try and make sure that this impacts your trading, and this actually you know confirm and then tell me in the comment section after a week or two and say, truly I tried what you said and then it worked. So I don't just want to skip through it, I want it to work for you. And then after that, we are going to cover bilateral patterns. So this brings us to the end of our video, though I'm going to do another one and post it, but this brings us to the end of this one. We just covered falling wedge. But before you leave, please, if you enjoyed this video, if you watched this video till now and you were able to finish it, clearly you enjoyed it, clearly you liked it. So please do hit the subscribe button so that you can see and then that you do not miss the series that we're doing, which is Forex chart patterns. We always do stuff like this in this channel, and then you get to get it for free. You don't have to pay. And just to support, as a matter of support, if you'd like, not going to subscribe, which I don't know why, and you can just hit a like. It helps that the YouTube algorithm can see that you enjoy this video, and then it will push it, and then someone else can also get to benefit from this video. Please, we also have a Telegram channel. Before I forget, we have a Telegram channel that you can join, that you can get free signals and then materials like this and even extra. The link is in the description, and we do have a lot of different packages. And the Black Friday is coming just now, so we're going to have something nice and special. And just that, before I even forget, because you watch this video till this point, you can get a coupon to use on the courses or signals. We have fundamental signals, we have technical signals, and they are all different. We have 4 different packages that you can join and then enjoy. I will put the link in the description, and you can see what they are all about. And just please do check out our website also, and check out the blog. Check out the blog that we just did now. It's also about Forex chart pattern. The blog is in the website. I will put the link in the description, and please do check out our social media handles. And personally, I know I'm not so much in social media. I do try, but I do have people who are running the social media handles. This phone, okay, I forgot to. Now it's messing with my light. I'm sorry about that. I forgot my phone is on. And yeah, so do check out our social media. We are available on Instagram, we are available on Facebook, and also on Telegram. Put this light here. And also on Telegram. And just do check us out. Email me, contact me. My number is on the description. Check me on WhatsApp. And yeah, we'll talk more. If you want us to talk about anything else after this series, let me know, and then I'll make sure to the best of my ability to cover it. So please do subscribe into our signals and get signals. I almost said free signals. If you want free signals, join the Telegram group. The link is in the description. So what more do you want? And there's a coupon there for you to get a discount in signals and in courses. We have the best course. I dare you to come with the course, the beginner course that can beat ours. I dare you to show me. Send me a link. I know I might live to regret this, but send me a link in the description if you think there's a course that's better than ours. But before you do that, do check out the course that I'm talking about. Do check it. It's the link, it's in the description. Check out the course, check out the content. If you think there's a course that is better than that, just imagine these things that we just did now. I did it for free. So now imagine in the course what you're going to cover. Otherwise, my name is Proqnosiz. I also go by the name Alpha Wolf Forex. I will see you just now with another video. I am out.